Was the selling today caused by the concerns around Cyprus, or is it more to it than that?
Yeah, look, I tend to agree. I don't think that's the legitimate reason why the market's selling. Certainly it can be seen as a trigger for investors start to selling, but once you see a bit of selling come through when the market's rallied this hard, it tends to sort of be able to sort of self-perpetuate a little bit and continue the selling flowing through a little bit. And I think really as an investor, you can sort of look past Cyprus at the moment. I think what we saw through 2012 was Europe will continue to muddle through this crisis. We're not going to see a nation like Cyprus cause the Eurozone to collapse. So I think investors can be a little bit more forward-looking. The market seems to be very concerned with short-term events at the moment, what's going on in Cyprus, some short-term concerns around China and possible tightening as well. And I think this is really being illustrated within the mining stocks and the resources. These are what I've been watching in particular. We're seeing some of the big miners and the material stocks start to reapproach levels, lows and levels seen through 2012, when at times through 2012 we did have some significantly more concerning news coming out of Europe surrounding larger nations such as Greece and Spain, and also heading into the slowest quarter of Chinese growth in something like 13 years towards the end of 2012. And you look at some of the big stocks, BHP minus 15%, Rio's lost 20%, Fortescue off 30%. That's just over the last 1 month period. And look at Rio Tinto, for example, now trading back around $57. It bottomed out around $50 in 2012. So these are starting to get back to, I think, oversold levels. And I think this is because the market is very concerned over sort of short-term concerns within China in particular at the moment, and the rapidly rising property market there and concerns over tightening. But you look longer term through 2013, we've seen China bottom by the looks when it grew only by 7.8% in the fourth quarter. And it looks like it's going to accelerate past 8% in 2013. So our miners, with looking through to the second half of this year, probably expecting cash flows and earnings to start rebounding. So I think the market now, I think investors should be looking ahead rather than backwards. Also, of course, we're now heading towards the end of March, and there's an old saying in the market, sell in May and go away. And if we have a look over the past 3 years, this has been very true. Just over a rough 1 month period over the past 3 years, we've seen the market pull back by 14%, 9% and 8% during that period. So I think market at the moment, it could see some further weakness over this period. It has historically. So I think investors should be looking at the right kind of companies to start getting into the market once that pullback does come.
Resources, can't leave without asking about that one. Back in a trading halt today, with Hanlong not being able to meet the financing deadline today for that deal. So now they go into a 5-day period of consultation. So we probably won't hear from Sundance now until April 8. What lessons, I suppose, can we take away from this long-suffering takeover battle?
I think one lesson we can take away is the fact that the market seems pretty good at pricing in the chances of whether one of these deals is going to go through, because the share price has traded at a significant discount the whole time, mostly after the price offer was dropped to 45 cents, traded anywhere from 20 to 40% of a discount to that. So the market really indicating that this deal was unlikely to go through, and now with the latest announcement today, this deal looks pretty dead. The market certainly priced it over the past week or so before it went into the trading halt. The shares traded down to around 21 cents before it was placed in a trading halt, and then the shares suspended. So that's well below the 45-cent offer price. Now I think as shareholders will be hoping that management of Sundance has had the foresight to see that this deal was not looking particularly good, delay after delay. So hopefully they've been exploring other options. There was some reports of possible interest from Glencore. Maybe China might even be interested in looking for another partner for Sundance to develop the project, because Sundance really does need a partner to be able to develop. This is going to cost $5 billion, this project in Central Africa. At the moment, Sundance has a market cap of less than $1 billion, so clearly they need a strategic partner, mainly to provide financing there. I think one of the big issues with this deal was Hanlong is a private enterprise in China, and its chairman is a billionaire. It's not one of those state-backed Chinese companies or state-owned Chinese companies. If it was, I think we would have seen financing come through quite easily, and this deal would have been done well and truly by now. So I think the chances for a positive outcome now a bit cloudy. It is a significant asset. It does have the chance of supplying a significant amount of iron ore, but of course there's a lot of concern in the market now that too much supply of iron ore is coming on, and that there's going to be significant oversupply moving into the future. But on the flip side, you know, we've already seen regulatory approval by the countries involved pass, so it'll be interesting to see. I think the deal's looking pretty dead, but interesting to see where Sundance will go from here.